Ideally, what we want to do is move the portfolio in a way which brings the companies we invest in along the same journey. But there will be times, and we recognise that, there will be times when exclusions have to be considered. And what we're really worried about here is the prospect of stranded assets. The main job of the investment programme, which supports the whole group, is to make sure we can deliver on our financial commitments to our policyholders ultimately. So we don't want to be in a position where some of the assets that are held within the companies we invest with are suddenly discounted or are written down at short notice. And we see that as a potential as we move forward with the coal industry, particularly in energy production, as the world moves more towards sustainable sources, and obviously coal mining, which supports that. So we reached a critical point where we felt that to protect the sustainability of the programme, it was time to exit. Now, when we made that announcement that we were no longer going to be investing in coal and that we were going to exit, of course, you set a long date ahead because you don't want to telegraph to the market that you're getting out immediately. But we were fortunate this year. Liquidity conditions were strong and there was a market for us to exit more quickly, both on the equity side and importantly on the fixed income side, where a lot of those core holdings we hold for 20 years plus. I mean, we've been a big investor and still are a very big investor in infrastructure in this region. We invest over $50 billion in infrastructure across the region. So a big decision for us to exit some of those long-dated positions.
So you exited that exposure. What did you fill it with? Are you able to share with us some of that?
So, yes, so what we try and do when we exit, of course, we want to put more sustainable type investments in there. So anything that's aligned with sustainable energy production. But of course, that's quite scarce at the moment. So we do have positions and we're building those gradually over time. So in the absence where we can replace completely, what we're looking to do is replicate some of the economic outcomes in terms of the cyclical nature of those investments, the very strong foundation of creditworthiness. At the cornerstone of our investment program is our credit underwriting. So making sure that when we invest long-term, and we are a long-term investor, we need sustainable outcomes, and therefore those credits need to be money good. So we're looking to put additional credits in which replace those. And actually, it's gone pretty well this year, and that's why we're so keen to make the announcement early, because things have gone better perhaps than we could have anticipated.
Mark, good morning. So coal's out, but what about oil and gas? Is it the case that if they are taking meaningful steps to really decarbonise the portfolio, then you remain exposed?
Yeah, the jury's really out at this stage 3, I think, with all fossil fuels. I think we reached the point with coal, though, particularly where these are monoline businesses. There is nowhere to run for cover. Either you're in coal or you're not in coal. So we took the decision to exit. I think with the oil majors, they are making big efforts to reposition themselves, to, as you saw in Europe, to break up the company and make it easier to make that transition. I'm not sure yet we're at the point where we can have any confidence really and say that transition is a definite. But we're still working our way through those issues and trying to understand how the big oil majors are positioning themselves. And this will be ongoing work. And as I said with coal, our initial stance was to try and work with the companies and see what was possible. Obviously, we reached that point with coal that it wasn't feasible to continue. I think with the oil majors and the move to gas, which is less carbon intensive, of course, and the support of sustainable energy sources, we'll persevere and we'll continue to work with our investee companies and see what's possible. But I think at some point, we again don't want to be exposed to stranded assets, and we will continue to monitor the situation very carefully as a responsible investor. And not only our policyholders expect it, but our shareholders expect it. There is a big global movement, of course, to try and push the agenda. As we've seen, often governments have come up short with policy, and I think the private sector finally has realised that it's got to step up.